Hello, welcome. Welcome to a live stream where we are going to be charting and updating key levels on stocks and ETFs in my watch list. So if that's something that interests you, definitely follow along, sit back, find your favorite drink, and let us begin. Let me share this with our Discord team and let everyone know that I am live. And I'll also answer any questions or any stocks that you see value in. I will take a look at those as well. Okay. All right, looks like we are good to go. Thank you for your patience. We got the chat out and we're going to start sharing our screen. Perfect. So, guys, if this is your first time watching, welcome. This is something I want to try to start to do on Saturdays, basically just adjusting key levels. Now, I usually do this on my own, but I thought, why not have you come along and see what I'm actually looking at and those key levels that I identify to help you better understand certain stocks, whether they're going to go up or if they're going to go down, where to buy, and technically where you can potentially sell. Now, as the thumbnail indicates, this is how to identify key levels. And so that is what we're going to do. We're just going to follow along with me on exactly how I do that. So first off, let's go ahead and look at QQQ, as it has had a major selling day, or a day where it sold off significantly. Now this was Friday, and this was one of the worst days since April. Sold off 5%. Okay. Now, one of the key levels to first identify is the all-time high. The all-time high of QQQ, or Invesco overall NASDAQ, was 613.18. And we were able to identify that from this point here and this point here. And it also had a horizontal pattern for quite some time as well, holding support at about 602 and 89 cents, we'll call it. Okay, as you can see, this little area here, it showed strong consolidation and support at that level, popped up, came back down, found support again, popped up, came back down, found support again, found support here. And so with that, we can identify that this was a strong support or a key level of support. Now, on Friday, when it broke this key level, it actually sold off even more. And right now we're looking at the 1 hour chart. I could actually pull my order book level 2 down because we're actually not trading right now. And if we look at the 5-minute, we can identify something else. It was a strong support or key level at the moving average. So this green line is the 200-day moving average. It basically shows the average over the last 200 days or 205-minute ticker, or, you know, if you're on, of course, a daily, that's 200 days average. The 1 hour, it's 200 hours average. And when looking at the 5 minutes, 205-minute candlesticks. Okay, I hope that makes sense. Now, it broke that key level and it sold all the way off to 602 support. It then tried to get above it. It couldn't, it got rejected, and it sold off significantly. Now, today, the whole point of this is to move these levels around, not only on QQQ, but on some other companies as well. So that is what we are going to go ahead and do today. But I wanted to give you guys a better understanding of exactly why and what I'm doing. So also on the 4-hour time frame, QQQ has now passed this 200-day moving average, and as you can see, it's usually pretty bullish. It stays above that moving average pretty well, and on Friday it dropped significantly below it, all the way to $582, and then it popped back up. So it had a nice smooth little recovery from 582.04 down or up to about 590. Right now it's sitting at 589.93 after hours. It is October 11th, about 3:30 in the afternoon my time, and it's Saturday. Okay, so even though it sold off 5%, it actually recovered about 1.5%. So with that said, support levels, resistance levels can be a great identifying factor, or a great area of, I guess, influence, and what other traders are looking at too. And when you're able to identify key levels like support and resistance, and also understanding when your moving average is acting as also a support or acting as a resistance, then you can better understand a trend and when to buy stocks. So even on the daily, you can see here it's not very significant of a pullback compared to where that moving average is. Now, moving forward, we're going to go ahead and go to the 4-hour chart. We're going to bring this green line down to 582. Now, why 582? Because at 582.04 is where it bounced back up. Now, it doesn't necessarily have to be the best indicator for support, but because it had a strong resistance at 582 previously, back in August, this can definitely act as a strong support. Now, another key level you can say would be where it popped back up, where it's at 589 now, but right there where that candle is, about 589.40, could be another strong support, as it didn't hold below this level. It kind of just bounced back up, and you can see that it had other key levels around 589 as well. Back in September 15th, September 17th, and September 25th, there was some strong areas of that support factor. So with that said, that could have been a nice area to buy. And of course, up here between 613 and 609 could be an area to sell. Okay, so great little rundown on kind of what I'm doing. And yeah, let's go ahead and go through the rest of these stocks. And I won't have to go into as much detail about every single one, because now you know exactly what I'm doing. So same thing for TQQQ. The last time we drew lines of support was way down here, about $85. You can say 85 was strong due to that previous resistance and support. Another resistance now for TQQQ would be 109.68. That is a resistance level. That was their all-time high right before Friday's correction, you could say, or small pullback, which was actually pretty substantial. Now, another area here would be right about 96 as a support, and I would say that 93. Now, this, again, this is just me charting some stocks and giving you my ideas and opinion. In no way is this financial advice. Trade at your own risk, okay? So with those levels, you can see, all right, maybe we take that one out. There's some support here. Now, it could also sell off even more, but that is actually looking like a pretty decent support, I would say, right off of that level here. So there's room for it to go back down slightly. Doesn't mean it has to. Okay, this is just where it previously bounced, and I'm just updating these levels. All right, so looking at this, you can say, okay, well, there's a higher probability that this is going to continue an uptrend, right? And I have a better risk to reward ratio. I could definitely consider buying at these levels, right? Buying at this level, maybe having a stop about 93, maybe even 95-ish from where that level is, to where your price target now is, you know, a 12% price target. to a 1.5, maybe even 3 to 4% stop loss, right? So you're risking 4% to make 12%. That's a 1 to 3 risk to reward. Now you could always bring this up higher. Maybe you're risking 1% to make 12%. That's a 1 to 6 risk to reward. So I would rather buy down here and have more potential of this going up from these levels, right, than buying up here and expecting it to go higher. There's a higher probability that this is going to come back down and test moving average and test some of these levels down here than for it to technically go up. Okay, and I want you guys to be aware of that. Your risk to reward levels should not look like this. You should not be buying up here and holding way down here to make a small profit here. Okay, so that's a cool little tidbit for that. Open is looking really nice. Now we, again, with that same setup, we did have a nice risk to reward here of what is that, 8% to, I can't see the levels. Let me see if I could come over here. Yeah, so a 2.5% risk to make 8%. So that's a 1 to 4 risk to reward. So now looking at this, we could have bought in this level here and it pushed up, and it actually did. It pushed up even much higher than that, resulting in a very nice trade for anyone who held longer, because it did push above that resistance level, right? This resistance level, and that's actually, this is considered a horizontal pattern, right? It's hitting the support, bouncing to the resistance, coming back down to support, going back up to resistance, and then you get that resistance breakout, or the breakout to those new highs, which creates a nice area, right? And risk to reward ratio. Now, with that said, of course, this was the trade setup here. Very nice trade setup, and so we're going to be moving on from that. But right now, it's also showing another key level on open. Open is now showing some strong support with this moving average, which is just a few cents shy of $7. Now, because of that, we can say, okay, well, $7 could be actually a strong support, $6.95, and we have another key level here back on September 23rd, where it bounced at $7. When it was back here on September 8th, it had some resistance around $9, came down, and then popped up and made its way up to $11. So with that said, there's a higher probability that open can potentially bounce from the support level up to this resistance level. And if we update it, it actually would be much higher. So moving our resistance level from here, which is a key level, to potentially having a even third key level of resistance, okay? And this is when it gets a little bit crazier, because you see one solid support, but then you see 1, 2, and 3 key levels of resistance. Now, I would not buy up in this red zone area. I'd be more comfortable buying in this area here. So again, it's all about risk to reward. You buy now at $7.50, maybe you're risking 50 cents a share, to where, okay, if it breaks below $7, I stop out. And you have the potential to make, you know, a 7% stop, 18% target, a 27% target, all the way up to a whopping 40% target. Now, again, this is not financial advice. Trade at your own risk. I'm just a dude charting some stocks in his living room. So that might even be a little bit too much of a potential loss too. From $7.50 to $7, you're risking 50 cents, but you're technically looking to make up to $3. Okay, so risking 50 cents a share to make $3 a share is actually a pretty nice risk to reward ratio. Okay, now moving on to sound. Sound again is at another key level, right at that moving average. Now this could come down to $14, so I'm going to keep that support level there, but I am going to create another support level right around 1550. Now, why 1550? Why not where this moving average is right here? Now, the moving average does play a great, it does showcase a great level of support. It is very bullish when it's above that 200-day moving average or the green line. It also bounces pretty significantly when it gets to that point. As you can see here, it had a very significant bounce when it touched that level. And again here, and continue to push all the way up to those $19 levels. But seeing that there's resistance back in September 8th, September 18th, September 30th, and now leading into October, we can see that 1550 might be a strong support level for Sound. And I actually have a few shares of it currently just to hold on to when I bought that dip. My average share price is 1650. Let's see, 1654 is my average share price on this very small position. And again, it's at 1695, so add another 5, 10, 15, 20 shares at 17 and begin to push up to those $20 levels. Now, some areas of resistance I can see very clearly would be 18 and a quarter. Oops, that's not the right one. About 18 and a quarter. Okay, that could be a very strong resistance. As well as 1890, very close to $19. And then of course that high resistance right underneath 20 bucks. So again, the risk to reward ratio could be very nice. It is a little bit overextended. It would have been nicer to buy down at $15.50, down at $16 even. And for anyone who did buy at $16 on Friday, as this did begin to push back up, could see a really nice potential of basically a 2% risk, right? If you bought at 16 and it goes down to 15.50, again, you're risking about 50 cents per share. This would be 2.76% risk to make 15% reward. Okay, so that'd be a very nice what's that, 1 to 5 risk to reward ratio. And then of course if it goes up to 20, you're looking at, you know, a 3% to 25%. So 3% risk, 25% reward. And even so, this has pushed up so much that you were here, now your stop, you actually have no risk, because if you bought at 16, it's at 17, you put a stop below to 1660, 1650, you're still going to make 50 cents a share if it pulls back. So now you actually have no risk on this trade if you did buy at 16. Same with me. I have no risk right now because I have an average share price of 1650. Okay, my risk was going to be the moving average. If it broke the moving average at 16, I would get out. So that's a 50-cent risk, or 3%, but because it's already up to almost $17, I already have a nice little 2% cushion, which means if it did go down back to 16.50, I'd break even. Right now, if I sold it, I'd make a small profit. And if I held, then that's basically pretty much risk-free. Okay, so I want you guys to understand that as well. Synex is another company we've been watching for a long time. We have not updated these charts in a while. Now this thing broke out very nicely. It used to have a very good horizontal pattern, anywhere from 1650 up to 20, back down to 1650, back up to 20, and it traded within this horizontal pattern for quite some time. It did have a very nice breakout. As you can see, it broke out of 25.37-ish. And what happened? It retested it as a support. So now the resistance becomes a support level, and that does happen very often. And I doubt we'll ever come back down to those $16 levels. Now, a lot of this has to do with tariffs and different things because of aluminum. Aluminum got a little bit more pricey. little more valuable, and that is the point of why this went up so much. So 33 could be a great resistance level, and 32 could be another resistance level. So 32, 33 could be some strong resistance, and even now, so 30, 50, 30, 40-ish could be a very strong resistance as well. Now, as far as support levels, I'm still going to keep that $25 support level and potentially a support right around $29, maybe slightly below that. Don't really have to go into too much detail about this risk to reward, but say you did buy at $30 and you wanted to have your risk around $29.11, you're risking about 2.5% to potentially make that first T target price 7%, second target price to 33, 10%. So you're looking at like a 1 to 5, maybe a 1 to 4, you know, or even 1 to 3 risk to reward. So as you can start to identify these key levels, you will then be able to chart and understand different patterns on your own. And I hope this is helpful. We're going to go through a few more. If you guys have a stock you want me to test or to look at for you, definitely comment in the comment section. Or maybe you want to see if your levels match my levels on maybe a particular stock or ETF that you're looking at. So leading back into it, we want to have a smaller risk to a higher reward. We don't want this thing to be 50-50 where you're risking 1 for 1, or we don't want you buying way up here and you have 10% risk to make like 1 or 2% reward. Okay, that's not what we want. We want more green than red, more upside than downside. And again, I hope this is all helping. Now, SoFi, another one of those companies trading in one of those horizontal patterns. As you can see, it had a strong resistance pretty much right where it is technically. Very strong resistance, and it traded within this pattern for quite some time between 24 and 26.50, pushed all the way up to $31 and came all the way back down to $25. So I do believe we're going to adjust this just a little bit. We're going to bring this up to around $25. Now remember, whole numbers like 25 or half dollar, whole dollar and half dollar tend to be pretty strong support levels, kind of like a psychological support. People would much rather buy at 25 than 25.02 or 25.05 or 25.10, but it doesn't always have to be the case. So 25 being a very strong support. Now I could technically see 26.50 as a support because, again, previous resistance or old resistance levels can become new support levels and vice versa. Okay, that does tend to happen quite a bit as well. And patterns tend to repeat themselves. They don't always have to, but they do tend to repeat themselves. From $31, it sold all the way off to $24. Well, look at this trend line. A very nice trend line, basically the entire way down. There was a trend. So anytime it hit this yellow line, it would get rejected, 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 rejected. Now you could also say that same thing for the support, right? If you drew a line underneath this, this is a little bit more technical, but you can see it bounced right off of these levels and tried to maintain at least above where that previous level was. Now those are also great ways. Those are trend lines, direction, you know, all that is a favor and plays part in charting these and identifying key levels. So SoFi, let's go ahead and do that long. Even buying here at 26.50, maybe you're risking a full $1.50 per share to this support level. I necessarily wouldn't, but the upside is far greater as well. You know, if it got back up to those highs of 31. Now, one factor though would be this key level here of resistance right around 28.60. You could even say Yeah, I'd say 28.50. 28.50 would be a pretty, I'd say, common resistance for this company. So buying 26.50 up to 28, making $2 per share. But the downside, I don't really care for, right? Because this is a 5% downside to about a 7% reward. That's almost a 1-for-1. Okay, now if I would have bought that dip, or if we would have participated on this pullback and bought within that 25 to even 25.50 range, then now you're looking at a 1.8% for a 12% risk to reward. Okay, it's a little overvalued now at this level here, so that might not be something that you'd want to trade at this moment. And it's also below the moving average, and if it stays below the moving average, then we could see some more downside. All right, hope you guys are enjoying the live stream. Hope you guys are finding this educational, informational, or overall just entertaining in general. Don't forget to take a drink of whatever drink you got. Right now I'm drinking some Coca-Cola Zero. I don't have any ads. I'm not monetized anymore. They demonetized me because they said it was misleading content, which is bogus. I live trade, or I did live trade every morning at market open. I showed you my wins. I showed you my losses. There was nothing misleading about my content. But YouTube wants to do that to me, demonetize me. It doesn't matter. I'm still going to do what I love to do, and that's trade stocks and record exactly that. So it's unfortunate. There's other traders that also that actually have misleading content, and they're still doing it, and they're still monetized, and YouTube allows it. And there's the little YouTube channels like me who apparently they just don't like. Maybe my information is too good. Maybe I said something or did something they didn't like. But the point is, I'm raw, and this is real time information that you can use on Monday to make money. Okay, that's the whole point. We're all here to do the same thing, and that's make money in the stock market. So if YouTube doesn't like it, too bad. You could delete this video. They've deleted at least 100 of my videos. They've taken away like, what was it, 5,000 hours, maybe even more, like 10,000 hours of watch time. I mean, they destroyed my channel, but I'm still here, and I'm not discouraged. I'm not mad. Don't have to retaliate. I'm just going to keep providing great content. Intel's been trading this horizontal pattern for a while, and guys, we charted this way down here when Intel was $18, $19, $20. None of these levels even mattered anymore. Okay, then it traded this horizontal pattern. I want to show that to you. Okay, there was a strong resistance here for the longest time back in July, and then it went from being a strong resistance, it broke out and became what? Could you guys tell me? Come on, somebody tell me. What did it become? Resistance levels change into support levels. Support levels. So support levels can come from resistance levels. And with that said, that became a strong support, and it held since, from August all the way through September as a strong support, maintained above that 200-day moving average, and then a huge spike up. Everyone remembers that day. I talked about it on the channel, pushing from $25 up to $33 in a single day. Literally, a single day, it went up 33%. 33%, yes. Not a very good Donald Trump impression. But maintained, there was resistance, again, resistance at this level, popped up to some more resistance, and now it's maintaining above in this horizontal pattern here. So this is a 4-hour chart on Intel, and as you can see here, it's had some nice support around 35.50, 35.60, I'd say. I guess you could say about 35.60. and it had some strong resistance around 37.80. Well, now looking at the way this is charting, we're seeing more resistance around 38.60, and we're seeing some support around 35. Now, the next support levels could technically be way down here at $33, and technically that moving average around 30. Okay, so I mean, I guess I could still do this long and short. This isn't something I would particularly trade at the moment because it's a 8 for 8%, so that's a 1-for-1 risk to reward. That's like flipping a coin, 50-50. It has a 50% chance of going up and a 50% chance of going down, and that's just not something that I'm willing to trade or put money into at the moment. Now, if it does come back down, say it comes back down to test $33, back at this level, then I would love to pick some up at, say, 33.50, risk down to 33. Again, that 50 cents per share risk, or 1 or 2%, to make a nice 10-15% reward. Okay, so that would technically be my levels. We would need to see this trickle down a little bit. Basically it kind of like does this, and it like trickles down to this level, consolidates, and then that's where I'd consider buying for that nice push back up to those key levels. And I hope I charted that pretty well, but it doesn't have to do that. Okay, by no means it has to do that. It could consolidate and just kind of do this, right, and then sell off. It could have a major push up and rally. It could just go straight up like that. It could be a little choppy and then just slowly push up and then sell off. It could bounce back up. Like, there's so many ways. You can't predict what the stock's going to do, but if you have a game plan, I wouldn't mind risking 50 cents to make $5 per share. Okay, so we're going to leave that like that. Cake. I've been watching Cake for a while now, guys, and I wanted to say Cake was doing very well here because it was maintaining above that moving average. It was trying to hold above it, and that would have been a very nice move from moving average of $55 all the way back up to 70. Could have resulted in a $15 per share or a nice 30% profit. Now, doesn't mean it has to go up that much, but it has before. It's bounced off of this moving average from 43 to 70, 58% profit, $25 per share. But right now, this thing is pushing down. And because it's below this moving average, Cake could very easily sell off, another 8%, 20%. Okay, guys? So I want you guys to be very careful with this company. It did break that support. So we're going to leave this support here just because it is technically a key level still. 69.39, still a great key level for resistance for all-time highs. Now, what about, where could this support go? Well, on the daily, we can see some areas of support right around 51.25, give or take, a quarter, around $51. We can also see that there's technically a lot of support around 47. Okay, so this could sell off significantly, very significantly. On the weekly, I mean, look at this thing. If you really want to look back, this can sell off to 42. It could sell off to 37, 31. It could go down to 27. Heck, it can go all the way down to $13 because it was there in 2020. Okay, it doesn't mean it has to. So just letting you know. And of course, with any company could go to zero. Any company could go bankrupt. Any company could get delisted. None of these companies are technically safe, but I just want you to know there's always risk, whether you're trading long or short, stocks or ETFs, options or futures. There's always risk. Buying a vehicle on the street is risky, right? Buying a car from a dealership that might not be reputable, or it might be reputable, is risky. So there's always going to be risk in anything you do in life. It's just a matter of what your reward is to that risk. Okay, so that's Cheesecake. And Cheesecake, one thing on Cheesecake, man, we can see some major potential. That's why I really want to consider maybe starting a light position for long, because even so, I mean, this is a great price point for cake, $52. Maybe I'm risking, again, maybe 52 to 51.50. It breaks 51.50, 50 cents, and it pushes up to 70. That'd be amazing. 33% return on a 1% risk. Doesn't mean it has to, but that'd be a very nice trade indeed. Okay, so we're gonna leave those levels there. AMD, AMD, man, just there's not much to say about AMD. This thing has pushed up so much. This one's a bit of like a meme stock to me, as I feel like, you know what I mean? Like, look, this popped up to 227.30 and then immediately gave back like $10, right? So this is a strong resistance for AMD. 227 down to 214. It gave back 6% on that candle right there. A lot of resistance at 186.92. And then a new high at 240. So I haven't really been charting this as much as I would like to. You know, sometimes these companies get a little bit overly bought, overhyped, and like, look at this gap up, huge gap up. Now, of course, there was news on this. There's a reason why this pushed up so much, but at the same time, I'm not comfortable trading this because it pushed up so much. It has a lot of room to come back down. It pushed up 37% in a single day, pushed an additional 10% in 3 days, and now it's actually given back, you know, gave back 13% on Friday, technically still down 11% from all-time highs. And this just doesn't look good, right? I mean, if you look at the long position, buying at 214 to this first resistance level, it's a 6% target. Up to all-time highs, you're looking at a 12% target there for profit. Now, what's a downside? I mean, you can see, you know, there is some support right around where it bounced, 207, right? But at the same time, I mean, this thing can go back down to the moving average. This can go back down to previous resistance levels, which technically I need to change this color to green because that now makes it a support level, okay? So the risk to reward is not there for me. It really isn't. Now, if you wanted to stop, okay, cool, you could have a stop. What is that, $7 a share to make $25 a share? It's almost 3.5–4% risk to make 12%. It's a little bit too much for me. But we're gonna leave that there just to identify those levels. Apple, same thing with Apple. If we look at the daily, it had a nice little breakout from that trend line, pushed up to 259, which was a common resistance, and now it's trying to maintain that support level of around 245. So we'll see what happens with Apple. Really not much to say about it. It did just now cross below, okay, it crossed below the 200-day moving average, tried to pop up and got rejected, and then pretty much came all the way back up. So, yeah, of course, Apple is a pretty good company. Apple phones, I have an Apple phone. I'm sure most people have Apple phones. But at the same time, there's a lot of downside. I mean, Apple could come down to 250, 225, or I'm sorry, 225, 200. So let's draw those levels, okay? 225, 201. Okay, there's just a lot of downside if this thing does begin to go down. I mean, look at it before. It's been at the 162, 164 range for a long time, right? Huge swings from 160 to 230, back down to 129 or 193, all the way up to 259, and then look at this, from 259 it sold all the way off to 168. That's a 35% loss if you were to take a position at that all-time high. Same thing with this. What's a downside to this? If it's been there before, looking at an 8%, 17%, 33% downside for what? To potentially make 6%. It gets to new all-time highs. Obviously, that could be infinite, but the risk to reward on this is not in my favor. I mean, look at this. Look at the risk on this. And look at the target reward. That doesn't make any sense, does it? Would you risk that much? Would you risk $82 to potentially make 13 bucks? No, you'd want to flip that, right? So making sure you know where your stops are, but also making sure you identify and you're smart about those decisions, right? You're smart about the decisions that we're making. That could very easily be a stop. Okay, so Apple's out of it. CoreWeave, I don't really want to talk about CoreWeave too much. It is somewhat of a meme stock. I mean, it's pushed up all the way from $188 at one point to all the way down to 84 bucks. And then within this small time frame, it looks like we already charted it. It made 45% profit, $40 per share in 5 days. In 5 days. So I don't really want to go into too much detail about CoreWeave. It just seems like it's definitely one of those companies that just, it's way too risky. This is way too risky, guys. Okay, got what, 2 or 3 more. Oracle, you know, same thing, somewhat of a meme stock, getting somewhat popular, had a 345 high. It also has a 329, 330 resistance. And again, this would have been support. It would have been blue or green, but now it's below. It's below that level. So technically it could be a very strong resistance as well. And so for that reason, the only support I see would be moving average and around 280 to about 275. Okay. But if it drops below this moving average, this solid green, we could see this thing come way down back to where it came from. You know, very easily this thing could come back down to 240. Okay, so that's like a 50-50 risk to reward. That's not something I'd consider trading. It's just a little bit, it's like flipping a coin at that point on this trade. So now if it does hold, you know, you do think that this has potential, it holds above that moving average and it doesn't go below that moving average, well, you can take a trade at 289, put your stop at that moving average right there. So if it does come down below, and we could do an example of that, if it does kind of begin to trickle down, you know, it goes up a little bit, it comes down, then it goes down, and then it comes down even further, well, you can stop out. If it doesn't go to that point and it begins to trickle up, then we can see a nice upside, right? Very nice upside if it does do that. So technically you can take a trade at 289, put a stop at 285. You're looking at, you know, 1% risk, $3 or $4 to potentially make around 20%, right? And again, not financial advice, just guy charting in his room. Don't get me deleted or banned on YouTube. I already got demonetized. So hey, no ads for you guys. There's a win-win, right? I might not be making any more money on ads, but there also isn't any ads. So there you go. You're welcome. Just kidding. Nvidia, same thing with Nvidia. Had that horizontal pattern, 164 support, 170 support, pushed all the way up to 184, 185, and then pushed all the way up to 195, and it just couldn't maintain those levels of 195. It just couldn't. It ended up selling off on Friday. Now, Nvidia is a pretty solid company, $4.4 trillion company, microchips, etc., etc. So I do believe this thing could pop up, you know, pretty significantly. When it does go back up to those all-time highs, we're looking at about 6% profit, $12 per share. But at the same time, I mean, that risk to reward on this is just a little bit too high for me in my book. 183 long, hey, I wouldn't mind 183. But, you know, this could also sell off a little bit more. It would have been nicer to buy in the dip at 179, right? 179, 180, buying around that level to potentially go up back to those highs. But right now, you know, being at 183 could potentially come down and test a moving average. We're looking at a 2% risk for maybe around a 6% profit. So a 1 to 3 risk to reward. That could technically be acceptable. Okay. And that was a support. Now it's a resistance. Amazon. Amazon is getting beat up. Its support is no longer there. So that support will now be a resistance. And a new support, technically 211 for Amazon. And maybe even right around here around 216. So, you know, could be in that range to buy. But it has to prove itself. It has to get back above this. Actually, we're going to delete that level. So within buy range, has some potential upside. I'd rather take an Amazon position than probably that Apple position, because look at that. Risk 1.5% from the time of this recording at 215 to potential target price of 234 to the lowest. Nice 8% profit. And to that all-time high, basically 239.99, 239.50. I mean, you're looking even more. You're looking at about 11%, right? So from 9 to about 11% target, right? But I don't like that it's below this moving average, because again, this can play as a strong resistance factor. So even the moving average could be a strong resistance, which means that risk to reward ratio, even just, you know, small term, or not long term, but short term, you know, just getting back to this moving average could be game changing too. I mean, you're looking at a 1.5% risk to a 5.5% reward just to start out to get back to that normal level that it trades. And again, this thing could go up much higher than that. You know, Amazon is still a pretty profitable company. It's a $2.3 trillion company. So, you know, there's still that. All right. So let's see. Do you guys have any stocks you want me to take a look at before I potentially get off? We just have a couple left, so think about it. Let me know if there is. Google, we can talk about briefly. 256, I'd say even about 250, 450 is a strong resistance, and 256. Now, of course, if it goes higher than this level, we can get some breakout action and go up to new highs. Right now, that support that it bounced off of was 233, and you could see that right here very clearly back in September 8th. So is that a key factor? Potentially. And it is below the moving average, so I don't necessarily like this as a long, but as a nice oversold reversal. I mean, again, we're talking 1% risk to a 3% reward just to get back to that moving average. If it pops up to those all-time highs, you're looking at a 1% to 8% reward. So a 1 to 8 risk to reward on that one, okay? But again, it has to prove itself, and it has to get back above that moving average. But I mean, even then, if this continues to push up how it's starting to showcase that now, then your risk could be much smaller. It could be at the bottom of this candle here. So then now you're talking about less risk, a half of percent risk to make, even just to the moving average, potentially 3 to 4%. Okay, so that could potentially be a very nice trade to take as well. But because the markets are technically selling off, this could go much lower as well. Okay, it doesn't mean the market's going to sell off forever. It could have already seen the sell-off and then bounced, and that could have been it, right? Same thing with Tesla. We haven't charted this in a while. Resistance levels for a long time were at 347, and now resistance levels are at 479. 444, 443 seems to be a new resistance, right? There's all that resistance here. And then trying to hold above that moving average. So we're starting to see a theme here that some of these companies are trying to hold above that moving average because they know once it gets below it, there's going to be even more selling pressure, and that could be even more detrimental to the company itself. So 408, potentially a strong support. I am always been a long time Elon Musk supporter, a Tesla supporter, but he's just not doing very good with the company at the moment, and the company overall isn't doing very good. Some of their Teslas have lost 50% to 100% of their value, and along with other political stuff going on, blah blah blah. So Tesla, not necessarily something I'd mess with, but because it is at that moving average, hey, maybe your stop is super small. Maybe your stop is so tiny that if it goes below the moving average, you're out. But if it bounces, you could see a significant bounce, 8.5%, 17%, back to those all-time highs. But this is one that I necessarily wouldn't want to trade and hold if it did start to go down. But has some strong support at about 409, 410, horizontal pattern. So could we get that bounce? Definitely. We could definitely see a significant bounce, even back up to 443, 8.5% profit, $35 per share. So it's definitely possible. Okay, and last but not least, on my watch list of less than 20 shares is UNH. And we've been charting UNH for quite some time. Hope you guys enjoy this. Smash the like button for me. I'd appreciate it if you did. And UNH, it was all-time highs, $606 at one point. Now, of course, all that stuff with the CEO getting shot outside of, I believe, the headquarters. A lot of bad news, a lot of bad publicity. This thing has tanked from 606 down to 245. That was a 60% loss in their market price, in their evaluation. They're only a $320 billion company. 60% loss. I mean, this thing was at least almost $1 trillion, right? Or 600, maybe 700 billion. It lost more than half of its total market cap. Traded horizontally, this green line was a strong resistance for a very long time. 310 was a very strong resistance, and then look at that, it broke out of 310, and now this becomes a support, creating new resistance levels around 350s, and now ultimately creating that resistance level around 376. Okay, so where do we go from here? Well, if it holds above the moving average, which it did, it came down to 340, bounced back up. It's now sitting at 347 after hours. This thing can potentially bounce. Maybe you are risking, again, around 1%. And this is great when it works out like this, where you have 10 or 20 companies that all have about a 1% risk and a nice 5 to 10% reward. I mean, you're looking at a 1 to 5, a 1 to 6, even a 1 to 3 risk to reward could make a big difference. So UNH, it is holding above that moving average, buying at 347. Maybe you're not even risking down to 343. Maybe you are, but ultimately we should start seeing somewhat of an uptrend. If it does even go up to its moving average of 365, well, there's definitely some potential there, about 5%. So you're risking 1 to make 5%, or those new highs, which they're not all-time highs, but they're highs for this period in time. Maybe you're looking at a 1% risk to about an 8% reward. Just know that when the companies are below that moving average on, like, say, the 1 hour, you could see more rejection from that level, okay, from that moving average. On the 4-hour chart, though, it's looking pretty good. And that is my rundown of stocks. Now, one key thing to note is the volatility. This is crazy. So this is why we have such a significant sell-off on Friday too, because this went from $16 on the VIX all the way up to 22.50. Now, it did come down a little bit to 21.60, but know that when this is above 20, we're going to see a lot of selling pressure. The market is going to begin selling off more significantly. And as you can see, over the past even, 2 years, it hasn't been above 22 very often, right? So when it gets above 20, we can see selling pressure. If this gets to 25, we are going to see some major pullbacks from the overall market. It got to 65. That was the crash in 2024 in August. And recently in April, when we had one of the biggest market sell-offs in history, which was in April of this year, this got all the way up to $60, okay, on the VIX. So the VIX index is not, we are not looking good, guys, as far as the VIX index. This thing is up 20, which means that we are going to be seeing probably some more selling pressure for the next couple of days, maybe the next week. We might see a significant recovery, as you can see here on the last one, pushed all the way up, and then when the matter of, a day or two, a couple days, I'd say, it came all the way back down. So you have these major spikes in one day, and then you have these major pullbacks where it kind of settles. So that's another great indication that you can keep your eye on for the overall market and watching key levels. Again, like I said, when this thing gets above 20, we see some significant selling pressure, as well as when it gets above 25. So 20 right there, okay? So 20 resistance, that is not good. That is not good. That means we're getting into some crazy levels and some selling pressure. Now, of course, this thing doesn't ever really get below 14, and it's not something you could technically trade, I don't think. Yeah, this is not available to trade. This is just an indicator showing market volatility. When there's a lot of volatility, or again, when it goes above 20, you'll see a lot more selling pressure than the market kind of being stable and going up. So we don't really need that level there. 20 is a great indication for a significant sell-off, and yellow is just like detrimental, like we're going to see like a market crash. So we'll keep red here. It's above that resistance, which again, it's not good. We want this to be lower than 20. And overall SPY to very low. But in the grand scheme of things, it doesn't really mean much. This thing could sell off though. It is October. October's usually, or is it September? September's usually not a very good month historically. But yeah, even SPY could come down to 605 again very easily. It was just there back in June. So yeah, that's kind of my spill on the overall market. Hope you guys enjoyed. Doesn't look like we had too many people come out today, but again, this is not something I typically do every Saturday. It's something that I'm going to start incorporating. And yeah, I mean, we now have over, what do we have now? 7,430 subscribers on the YouTube channel. And we just crossed over, I believe, 71,000 on our Investing for Beginners community, which is on Facebook. You guys can definitely check that out. It is free to join. It's a private group, so you know that you're safe from scammers, spammers, and anyone who just doesn't make any sense to you or is irrelevant. It is a private group. Investing for Beginners. I'll go ahead and showcase that to you now. 70.5 thousand members. Again, free to join. This is where we give you a lot of those market updates. On Friday, I posted this. 1.65 trillion. Oh, I need to showcase it to you though first. Let's see. Oh, let me switch you back. There we go. So as you can see, Investing for Beginners community, over 70,000 members. It is free to join. We get anywhere from 20 to 100 new members every single day, which is insane. I just cleared up the board and we already have another member request already. So definitely check that out. The link is in the description below. Is it? I don't think it is. Let me go ahead and post that. And we will actually put that right here in the chat, the live chat. It's free to join, 100% free. And I showcase stuff like this. 1.6 trillion was wiped out from the US stock market today. Worst day since April. Of course, we got people commenting it. It's a very active community. We have a ton of people in here, not just myself posting. You can post as well too. And then not only that, we have our Discord, which is the first link in the description and the first link in the comment section. Okay, and that's where we have close to 1,000 members, 1,000 members in our Discord, and or I'm sorry, yeah, close to 1,000 members, and we get new members every day. I give you my announcements here. You guys get to see my off-topic chats, different things I'm doing besides, you know, trading. We got some freebies here. We also got our main trading chat room, crypto chat, the profits chat, so you can go share your gains. Friday, I did really well at managing my risk, only losing $4. Not a big deal. $4, 4% on a trade. I could have probably cut my losses at about 2%. But hey, my max loss for the day is 5%. It was a very small position. That's why I like to start with positions small. You know, maybe you're buying 10 shares instead of the full 100, and then as the market or as the stock begins to go up, you add 10, you add 10, you add 10 until you get to that full 100 share position size. Maybe you trade with 1,000 shares. Whatever it is, I usually like to start with about a 10% full size. Trade ideas, this is where I give you my trade ideas. Again, showing you my buy, showing you my sell, profits, losses, why am I looking at these companies. You know, this shows some profits as well right here on Sound, Cake, and SoFi. Nothing too crazy. You know, way back. This goes back months and months, if not probably a year or two. And then my live trading, you can watch me live trade when I do go live. It used to be every day at market open. Now it's a little sporadic, but you can go back and watch all my live streams. I have them right here for you. There's days that I make hundreds of dollars. There's days I only make $20, $30, $40. And there are days in there trickled in where I actually lose money. So not every day is a winner. And then we have our weekly economic calendars, charts and patterns to help you identify breakouts, key levels, as well as some cool stuff as far as like well, like I said, charts and patterns, ascending triangles and breakouts, you know, knowing when there's a bearish triangle for the break below. Got some facts here if you're ever interested. And then for all of you who are, you know, somewhat active or somewhat athletic, we have our workout chat room, diet chat room, as well as some other free health resources, all available to you 100% free. It's lifetime access, and you can get started as soon as today by clicking the link in the description or in the comment section. And we have our Learn to Earn lesson library, again free, about 10 to 12 videos that show you from, you know, what even is trading to how to set up a brokerage to even how to use WEBULL. That is the account that I was using, was WEBULL. How to set up your charts and your platform to look like mine, as well as what indicators to use, what they do, what their purpose is, and give you a better insight on my trading style, all wrapped into that little Learn to Earn lesson library. So again, thank you for your time. I appreciate you all, and let's all have a great day. I'll be doing a Sunday stock talk tomorrow. We'll be going into some companies that I think I want to trade leading into Monday morning. So thank you for your time. Like always, remember, let's end the year on a green note. like and subscribe, and we'll see you all in the next one. Later.